Howdy folks, quick Saturday afternoon update. The swing trading blueprint is now live. You can see it on your screen. Have a look at the page, scroll down, read through all the stuff, and I hope to see you on the inside. So scroll down, read through all the details. There's a sign up link near the bottom of the page and decide whether this is for you. There's a link below this video where you can sign up. There are limited spaces and because it's quite an interactive course. So I think we'll probably close the doors by the end of the weekend or early next week. Anyway, that's not the main reason for this video. I got a couple of queries on Bitcoin and natural gas. And while we're at it, we may as well look at gold and silver as well. So let's just cover this in a few quick minutes. We're long on gold. Our entry points have been down here. I'm aiming for 2,600, 2,620 to completely exit this long trade and potentially go short. We're slightly hedged now to the downside, so we're kind of edging out of our long bullish position on this, on gold. Same with silver really, but we took silver profits early on Friday. And I'm not sure where this is going to push up. We've reached this big order block. A lot depends on the Fed and what's going to happen in the coming weeks and the election and the various wars that are going on. All of these things affect precious metals, especially gold and silver, being investment and flight to safety type instruments. So we're long on gold. We're edging out of that, maybe looking to go short somewhere around 2,600, maybe slightly above. And on silver, we're out of our longs. I'll wait to see if we get a pullback. Maybe next week we'll buy some more. There's an order block just below us at about 29.80. That might be a good area. I don't think we'll get below there if we are going to carry on moving up. So 29.80 might be a good place. We're at 30.80, so maybe a dollar back. And on gold, I think we could get all the way back to the 20-period moving average, somewhere around about 2,540. But if this is going to reverse and we do see a downtrend in gold, remember that gold kind of has these manic, mad spurts for a few weeks, maybe sometimes months, and then tends to just decay and dawdle and dwindle for months and months on end. And that's what gets traders quite frustrated, because there are a lot of carry costs on gold, as I stumble over that sentence. Now, so that's gold and silver. Bitcoin, on the other hand, I'm remaining completely long. And this level that we're at now, 60,000, this big order block, the 50-period moving average, the 100 and the 200 way above us, are really, really key areas. The big volume on Bitcoin is at about 60,000. If I put a volume profile on here, you'd see that, but I'm not going to do it now for time's sake, for brevity's sake, because I've got loads of, I can hear my email inbox going mad. We've just opened this swing trading blueprint course right now. So Bitcoin, I'm long, and I'm hoping to hold above the 20-period moving average now. As I've said in previous videos, if we can get a bit of a move going on in Bitcoin, the 20 SMA acts as a good support. If not that, then the 50. There's the 50, the red one, the 20 is the green one. So we're above the 50 only just, and above the 20 at the moment. Generally, I think there might still be one last spurt left in Bitcoin. I don't know. I'm willing to hedge this if we drop below this level here, basically this massive swing low that took place during the yen carry trade unwind. I'm getting a little tongue-tied today. I've been up since, I think, 4 o'clock this morning, sorting out the launch for the swing trading blueprint. So we're still long on Bitcoin, edging out of longs on gold, but still slightly long on that, and we're out of silver longs. Now let's go to natural gas. And I put a tweet up and a video last week saying, once we get to this channel top, we may have to reject. Let's have a look at this on the Henry Hub quickly, on the day chart on the Henry Hub. We've got this trend line underneath us. I'm going to redraw it. It's not perfect. It's actually not even a trend line. This is the W pattern that I drew in. Incredibly bullish, by the way. We've had several days close above the key level at 2.25. We've formed this W pattern. We've broken out through the top of it, which has confirmed that the pattern is now in operation. Pullback should not exceed 2.25. This really, really, really key level that we've been talking about really since the middle of the year. In fact, before that, 2.25 has been on our minds. If we scroll back a wee bit, you can see it's not only important at the moment, but it's been important repeatedly in the past. If I put this onto a week chart, and remember that 2.25 line is this big red line here, you can see, if I scroll back a very long way, that the price often reacts to that level. Let's zoom into that area there, and you can see even though we spiked below it once, we formed that sort of shoulder for that head and shoulders reversal at that 2.25 level. We saw rejections around here. We saw support over here. That's actually at 2.5. 2.25's down here. We saw support going back into 2020 at 2.25. Notice the next big level above us is the next red line. That's at 2.5, just around about 2.5, slightly above and below. You can see that line is also really, really important going back a long time. But let's focus on 2.25 for now and zoom back into where we are. And very similar to what happened in 2020, this has now acted as a support level. You can't really see it on the weekly chart, but on the daily chart, you can see it's a very, very clear horizontal support level, which goes back many, many years. We've now respected that level again, formed a W pattern in the process, and held above that level beautifully. And we're now above the 20, the 50, and the 200 period moving averages on the day chart. Let's have a look at the 4-hour chart on the spot price. We could look at this on the Henry Hub actually on the 4-hour. Why not? Let's compare it to the spot price over at Pepperstone. And once again, just ignore that green line. It's not a trend line. This is the W pattern that I've got drawn on here from before. Actually, we can just get rid of that. But basically, let me just show you the top of this pattern. The target for this pattern is actually at about $3 or just above, right there at that swing high. So now that we've observed that, let's get rid of it and zoom into the 4-hour chart so that we haven't got too many lines. Remembering that red line there, 2.25 is the key line. Let's put a trend line in and maybe some Fibonacci's to see where these pullbacks could occur or take us down to. I did say on Friday that once we reached that channel top, we would probably reject. That was on the spot price at Pepperstone. And here on the, we've got this new channel, something like that. We haven't reached the top of that channel, but something like that. Now, pullbacks could come back down to this trend line and the 50 period moving average on the 4-hour chart here on the NYMEX. We're holding the 20 only just at the moment, trying to move down. This chart's not live. It's the weekend. Will we gap up or not on Monday, or early on Monday in Tokyo? Will we gap up? Probably, I think. This is a bullish chart and it's looking excellent so far. Now, I want to have a look at this 4-hour chart over at the Henry Hub. And please, once again, forgive me if I sound a bit fuzzy today because I've been working so hard on this stuff. And I even missed a dot there on my chart. Now, let's have a look at this 4-hour channel on the spot price over at Pepperstone on the current natural gas price. It's Sunday, as I said, so we're not moving. There's that support line at 2.25. So this is the spot price. Remember, this is very different to the Henry Hub price. And we're about 6 or 7 cents below it still. So this is still going to catch up. And the forward months are still looking positive. We're still in contango. We've still got price increases to come, probably with a lot of rollover gaps as we move up. Be careful of that. And we've got a rollover coming up soon again. Not quite yet, in about a week and a half's time, depending on your broker. So could we get back down to that channel bottom, breaking below 2.25, which is where we are at the moment? Or are we going to just simply gap up, hold above 2.25, aim for 2.5, and eventually aim for $3 or $3.20, $3.40, 50, 60, or 75, somewhere around there. So that's why I think we're going to gap up on the weekend. I don't know that for sure. We might gap down. We could actually get back down below 2.25. We are slightly below it on the spot. Let me remind you, if we go to the Henry Hub price, the real price, the futures price, the real natural gas price, that's trading at 2.94. We looked at Pepperstone, that's at about 2.294, sorry. I said 2.94. Let's call it 2.29. And at Pepperstone, we're trading at 2.23. So 5 or 6 cent difference. That means that Pepperstone has the opportunity to catch up still. The futures price trading higher. So the futures are holding well above the trend line and this 2.25 level, and that's what's important. That's what matters. Keep that in mind. We're well above it still, 2.29. We could get all the way down to 2.25, 2.24 maybe. That's a 5 cent drop. That could see the spot price drop 5 cents if that happens on the futures. And if we drop 5 cents from 2.21, we get down to 2.15, somewhere around there. And coincidentally, and as luck has it, in my tongue-twisted state of mind, there's the 50-period moving average. The 200 and the 100 are just below there too, and the big level, which coincides with the 2.25 on the Henry Hub. So bottom of the trend line there, perhaps bottom of the channel, 50-period moving average. We got the 200 and the 100 below us. That's on the spot. Henry Hub, the main thing we should be looking at, we could get all the way down to here, another 4 or 5 cents lower, and still bounce off the channel bottom, the big level at 2.25, and these various moving averages. Well, I hope that helps you. I'm hoping for a gap up, but if we don't gap up, we'll probably gap down 5 or 4 cents to the bottom of this channel on the futures, which will bring the spot price down, and then they both will probably fill that gap and carry on moving up. That's what I think is most likely. let's find out, see what happens. Now remember, below this video there's a link to the swing trading blueprint, which I've spent months and months and months working on. If you want to learn how to swing trade the markets, including natural gas, energies, Forex, commodities, stocks, metals, whatever it is, you should consider taking the course. Also, there's a 50% membership discount at ArcisFX and a 50% membership discount at Energy Rogue too. We're talking about natural gas. I think that might interest you. You start off with 2 free months at my private trading group at ArcisFX, and then an ongoing 50% discount on both Energy Rogue and ArcisFX. Links below. Hope to see you there. Take care.